Monday. What do you think is going to happen Monday? I'll skip this fluff. There's going to be a lot of stuff happening next week. What's going to happen on Monday?
Monday, man, great question. So I want to take a quick peek at what the market looked like here today. I want to see what the NASDAQ looks like because typically AMC mirrors the NASDAQ pretty well. So if the NASDAQ has a red day, typically AMC will be pretty flat. It might not even be red really bad, but it'll be down maybe 1%, you know? So let me just take a quick peek. I want to pull this up and see what we saw in terms of action today. I think the NASDAQ was mostly green. It was, yeah. So we had a little bit of a hammer candle, which is actually good. I like that. I would say it's going to be a green day. I'd say it's going to be a green day. So the NASDAQ right now, what we had is the second green day in a row, just barely the second green day in a row. But I think it'll mirror that. I wouldn't know what to expect in terms of price. I don't want to give a hard price target by any means. However, I think it's pretty safe to say we could test $12. I mean, we almost did it today, especially with those call options expiring in the money. We had a crap ton of them. I don't know the exact number. I haven't done the math by any means. Like I said, I was pretty much busy all day, but take it day by day. You know, if we even have a red day on Monday, we still got to think big picture. We got to think big picture and just keep working towards that goal. So I would say next week is a better kind of guess as to what we're going to move towards. And I think it's just going to be a continuation. We're building that spring. We're loading it up, you know, getting that bulldozer revved. It's filling the gas tank, you know. We're just going to keep putting some gas in that gas tank. So I'm excited, man.
So a couple people are probably a little concerned about the amount of options that have expired today that were not in the money. I'm assuming that 11 was an important number for AMC and for GME. Even people that were on the stream earlier were asking about, you know, what do I do with a $350 call option that is expiring tomorrow? Pretty sad, but unfortunately, if those contracts are basically now gone, poof, out of the option chain, what does this bode for the gamma squeeze?
So people had $250 call options that expired in the money, right?
I said like 300 and 350, like those that are expired.
Oh, yeah. So those are gone. They're not worth much at this point. So there's a couple different strategies you can play in terms of call options. If you want to play it on a week-to-week basis, I would say don't set them so high unless you're only going to play with a little bit of money. If you're going to set really far out of the money call options, don't play with a lot. I mean, those cheap premiums are really sexy, but the chances of it, you know, coming to fruition, pretty low. The safer way to play options to me is to either buy them just barely in the money or just barely out the money. So for AMC right now, what would catch my eye is we closed today at $11. If I was going to purchase some in the money call options, I would look maybe at that $10 strike, that $9 strike. And if it goes up around $1, I mean, you profit off of that. You can take your profits and then reinvest it into more call options down the road or into more shares. And either way, you're helping the cause because those still need to be hedged for. They still need to be purchased so they can meet the collateral by the off chance you do want to exercise those. Especially if they're already in the money. I mean, as it continues to grow, you're contributing to the cause because with the more options you have, they still have to continue to hedge. So that's one way. Out the money, I would say just barely out the money. So they've got this $12 strike. They've got the 12.5, 13. I think all of those look pretty nice. I wouldn't be mad about that. Personally, I would probably roll with the 12 or the 12.5. I like to set them too far out the money, but you do end up paying a little higher of a premium for those if you do want to do it. So it's all up to you. You know, it's all about risk management. You want to roll something less risky, you got to keep it closer to the current market value.
I was finally strolling through the front page of Reddit yesterday, and actually one of the posts, I'm not sure if it was on Wall Street Bets, but it was someone who said, I finally found out how to do a call option, and he had a bunch of calls, but he was down 60,000, and then the first comment was like, unfind out how to do call options.
Yeah, right?
Yeah.
Right. Oh, I've seen these memes. It's just hilarious. It says, can you guess when I learned about call options? And it shows the guy's like 1 year portfolio, and it was like $90,000 for like 6 months. He went up to 100K, and then just a huge plummet down to like 5,000. I was like, no. I think I found when you switched back from call options. That was all shares. You just bought into a stock that went to zero, right?
Yeah.
That's crazy. That's why I'm really careful about call options, man. I mean, if you're an absolute master, you could destroy the market with call options. But to me, that's like literal gambling. Like you're betting on a stock going up or down. And if you're wrong, you just lose that cash. And there's so many unpredictable, uncontrollable things about the market, which is why I use it as a supplement and not a foundation. So it's up to you. But I'd rather hold physical shares, especially for something like AMC, because the timeline is so kind of ambiguous. You know, we just don't know when things are going to happen. So just play it by day, you know, day by day by day. play safe with call options, in my opinion. If you're going to set out extremely out the money call options, set them for a later expiration, pay the higher premium. It's 100% worth it because you don't want to be stuck with, just losing $90,000 or whatever it is. That sucks. Like nobody wants that for you,